Hello, and welcome back to Explain the Charts, where we break down complex market movements into actionable insights. Today, September 25th, 2025, we're taking an in-depth look at tech giant Apple, ticker symbol Apple, which has seen some truly significant action recently. The primary catalyst driving Apple's performance is the highly anticipated launch of the iPhone 17, along with new Apple Watch and AirPods models, unveiled just last week. Initial reports and strong demand indicators have been overwhelmingly positive, propelling the stock higher and erasing its previous 2025 losses, making it the final tech mega cap to turn positive for the year. Bank of America securities analysts highlighted extended iPhone 17 shipping times of 18 days, a notable increase from just 10 days for last year's iPhone 16, signaling robust consumer interest across the board. Internationally, the demand is equally impressive. JD.com reported record pre-orders for the 256GB iPhone 17 in China, and India saw a substantial 19% year-over-year increase in pre-orders. This wave of positive news has significantly bolstered analyst sentiment, with Wedbush's Dan Ives raising his price target to an impressive $310, citing a powerful, pent-up consumer upgrade cycle and the potential for substantial AI monetization. Similarly, JP Morgan's analyst Samik Chatterjee increased his price target to $280, projecting strong iPhone unit sales growth through fiscal 2027, with the potential for a foldable iPhone to boost average selling prices even further. However, it's not entirely without challenges. Apple faces increasing regulatory pressure in Europe due to the EU Digital Markets Act, which could impact user experience and feature releases. There's also some criticism surrounding the postponed release of a product dubbed the Savant, and potential margin concerns if lower-priced iPhone 17 models dominate sales. These mixed signals create a fascinating landscape for technical analysis, and we'll dive into the charts to understand how investors are reacting. We'll begin by zooming out to the daily chart to get a comprehensive view of the longer-term trends and major price movements over the past year. Observing the daily chart for Apple, we can trace a clear and consistent upward trajectory for much of 2024, demonstrating Apple's enduring market strength. This strong rally culminated in a significant peak around $260.10 by December 2024, which is not only a 52-week high, but also a critical resistance level. Following this peak, early 2025 witnessed a notable correction, pushing the stock down into the $200 to $210 range, a period likely influenced by broader market jitters and initial concerns about Apple's perceived lag in the AI race. The sharp drop in April 2025, hitting a 52-week low of $169.21, marked a dramatic reversal point, but it was quickly followed by a powerful rebound, signaling strong underlying buying interest at oversold levels. Since that low, Apple has been in a resilient recovery phase, establishing a clear bullish trend channel, which has gained significant momentum in the latter half of 2025. The most recent price action, particularly from mid-September 2025, showcases an explosive bullish reversal, perfectly coinciding with the overwhelmingly positive iPhone 17 launch news. We see a strong breakout above several previous consolidation levels, pushing the stock from around $226 to over $256 in just a few trading days. This rapid ascent is backed by a noticeable increase in trading volumes, particularly on up days, which strongly reinforces the conviction behind this current rally and the shift in investor sentiment. Let's zoom into the 1-hour chart now to get a granular view of the electrifying September rally. Here, the intense buying pressure around the iPhone 17 launch becomes even more apparent, displaying a series of consecutive strong bullish candles. The stock was consolidating around $238 to $240 in early September, finding a solid temporary support at approximately $233 to $234 on September 9th and 10th. The decisive upward movement, a clear trend reversal, began around September 11th and 12th, marked by several large green candles that indicated aggressive accumulation. This initiated a robust short-term uptrend, with Apple consistently printing higher highs and higher lows, reflecting sustained investor confidence. The hourly chart shows that the current price level of approximately $252 is encountering some consolidation after hitting intraday highs around $256.64 on September 22nd. This consolidation suggests the market is pausing to digest the rapid gains, and $251 to $252 could act as a crucial immediate support level following the slight pullback observed yesterday. For short-term traders, sustained price action above this $251 to $252 zone is essential. A failure to hold could trigger further downward pressure towards the next significant support. Conversely, a break above the recent high of $256.64 would strongly indicate a continuation of the bullish momentum, with the 52-week high of $260.10 as the next major target. High trading volumes during these upward swings further validate the strength of the short-term rally. Drilling down to the 15-minute chart, we gain even greater insight into the minute-by-minute trading dynamics of the past few days, focusing on September 22nd, 23rd, and 24th. On September 22nd, precisely when news broke of Apple surging 4%, we can pinpoint powerful impulsive moves upwards with distinct green candles, especially the jump around 13:23 Universal Time Coordinated. This candlestick marked a clear acceleration of the bullish trend, pushing the price rapidly towards the $256 range, demonstrating the market's immediate reaction to the positive news. Following this initial burst, the stock managed to sustain its gains, largely consolidating at elevated levels through the rest of September 22nd and into the 23rd. However, September 24th saw a moderate downtrend, with the price settling around $252.31, which corresponds to reports of the stock trading slightly lower that day, likely due to profit-taking. For ultra-short-term traders, the area around $251 is a critical immediate support that was tested on September 24th and showed resilience, suggesting a potential floor. Should this $251 support level hold firm, we could anticipate a swift rebound towards the $255 to $256 range, potentially reigniting the bullish push. Conversely, a decisive break below $251 on this shorter time frame would signal weakening sentiment and could lead to a deeper retest of intraday support levels, possibly around $248 to $249. Monitoring volume during these intraday movements is paramount. Heavy volume accompanying a break of support or resistance provides stronger confirmation of the move. Now, let's synthesize these observations and discuss the overarching bullish and bearish factors for Apple stock. The bullish case is incredibly strong, anchored by the robust global demand for the new iPhone 17, which analysts were reportedly underestimating before the launch. Positive analyst upgrades, with price targets stretching to $280 and even $310, provide a significant vote of confidence in Apple's future prospects. The long-term outlook benefits greatly from Apple's formidable ecosystem and the immense potential for AI monetization, especially as new AI-driven features are increasingly integrated into its hardware and services. Conversely, short-term bearish pressures could emerge from natural profit-taking after such a rapid and substantial September rally. Ongoing regulatory scrutiny in Europe, particularly the implications of the EU Digital Markets Act, remains a tangible headwind that could affect future product launches or services. Concerns about product mix, where higher production of lower-priced iPhone models could potentially dilute profit margins, also warrant careful monitoring. A key factor for sustaining the current upward momentum will be the continuation of strong demand for the iPhone 17 beyond the initial launch phase, extending well into October. Any forthcoming guidance from Apple regarding Apple Intelligence or updates on the rumored foldable iPhone project would undoubtedly serve as powerful catalysts for further upside expansion. Market sentiment is also crucial. While a general tech sector rally can pull Apple higher, any broader market downturns could see it pull back more sharply given its current valuation. Therefore, investors should watch these fundamental and macroeconomic indicators closely alongside the technical signals. To wrap up our analysis, let's recap the critical price levels and potential scenarios for Apple. Currently, Apple is trading around $252.31, having pulled back slightly after its impressive run. The immediate, strong support level to watch is approximately $251. A hold above this indicates resilience. If $251 is breached, the next significant support rests around $235.12, which was previously an early entry buy point and now serves as a robust floor. On the upside, the immediate resistance is the recent high of $256.64. Breaking through this level with conviction is essential for further upward movement. The ultimate near-term hurdle and major resistance is the 52-week high of $260.10. A decisive break above this point would be a very strong bullish signal. The likelihood of Apple retesting $256.64 and subsequently $260.10 is quite high, probably around 70 to 75%. Especially if iPhone 17 demand continues unabated and no significant negative news emerges. Should Apple decisively break above $260.10, there's a 60% probability of it moving towards the analyst price targets of $280 within the next few months, potentially even pushing towards $310 over the midterm. Conversely, a significant pullback to the $230 to $235 range has about a 30% chance, particularly if market enthusiasm for the iPhone 17 cools or regulatory headwinds intensify. This would, however, likely establish a stronger, more consolidated base for future growth. A deeper correction, perhaps revisiting the $190 to $200 range or even the 52-week low of $169.21, carries a lower probability, around 10 to 15%, and would likely require a major, unexpected negative fundamental shock or a broad market crash. When deciding when and at what price to trade, always monitor trading volumes. Higher volume on breakout moves provides more reliable signals. Also, keep a close watch on Apple's upcoming earnings reports for concrete sales data and any forward guidance on AI initiatives, as these will be key drivers for future price action. Thank you for watching this in-depth analysis on Explain the Charts. Don't forget to like, share, and subscribe for more market insights.